Sometimes a well thought out plan that's executed precisely not only fails, but crashes with unintended consequences that no one could foresee. Chairman Powell and the Federal Reserve has raised rates 10 consecutive times from 0 to over 5%, and yet core inflation has remained persistent, sticky, and is not moving in the desired direction. We've recently seen upticks, which leads us to the obvious conclusion. The best set plans sometimes fall miserably on its ass. And that's what we're seeing with rate hikes by the Federal Reserve and the net change in inflation. It is not what we expected.
What's your plan? Prevent the ArcNet from being deployed. Kill anyone who tries. Good plan. Didn't work.
Hello traders, Gary Wagner here. 1 o'clock in Honolulu, 7 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands. Last day of the month, June 2023, and this is the Weekend Review. Today is the last day of trading for this month. The sad reality is that gold has declined in price for the last 2 consecutive months. Gold futures basis the August contract lost $1.70 and is fixed at $1,912.30. An interesting couple of weeks. This daily chart clearly shows the price decline from over $2,000 to yesterday's low right around $1,900. But we are able to identify a potential pattern, a candlestick pattern that could fill out next week. We had a solid price decline. We had a red doji followed by 2 doji candles, meaning indecisiveness in the market, and a potential pivot followed by a large green candle today. The low occurred below the 38.2% fib retracement. While it is a pattern of 4 daily candlesticks, I consider it a variation off the basic design of a 3-river morning star. We will have to see if we have follow-through buying next week. Of course, it will be a shortened day on Monday, and Tuesday we will celebrate Independence Day. If we get a break above the high of this candle, which occurs at 1946, that could be a strong indication that gold will trade at least as high as $1,950. Silver had fractional gains today, up 16 cents, with the most active September contract fixed at $22.75.5. We haven't looked at silver on a long-term basis in quite a while, so let's do that. First of all, we are looking at a monthly chart, which reveal that for the last 2 months, we've had consecutive declines. Although you cannot trade off a monthly chart, here is what I find interesting. There is a pattern that occurs after a defined uptrend. Silver meets that criteria, followed by a green candle that is fully engulfed with a red candle that opens above and closes below the real body. That is known as an engulfing bearish pattern. It doesn't have strong credibility without follow-through or a confirming candle. In the case of this pattern, that would mean you would get a large red candle with a lower low and a lower high. That is exactly what has occurred, which means that on a long-term basis, we could see silver track lower. That doesn't take into account what we could see over the next week or 3 weeks. It is the analysis of silver through a daily candlestick chart that warrants the most bullish attention. This particular price point at $22.41, the 61.8 fib retracement. What is so important about that number is we're measuring the pivot point when silver went from bearish to bullish up to the top and subsequent pivot from bullish to bearish. A 61.8% retracement is a deep but absolutely respectable retracement, which means that this is a logical point to look for some sort of potential technical support. Since we use former areas of support and resistance to identify future potential price points that warrant our attention, what I've done is I want to put up a basic horizontal line. That line is going to be able to help me identify if this particular price point shows us past performance that is a strong indication that it is a potential area to look for. And that's exactly what I'm seeing. Because when we draw the horizontal line here, look at this area here. Absolute top, an area of resistance. Here, an absolute top, an area of resistance. And finally, an area of strong support. When you get one price point that shows multiple occasions of both support and resistance, realize there is some importance to that particular price area. It's an area that could provide us with a strong signal to enter the market from the long side. This has been Gary Wagner wishing you, as always, good trading. We will talk to you after the extended holiday weekend. I also want to thank our YouTube subscribers for years and years of loyalty and support. Beginning next month, we will no longer release the Friday weekend review on our YouTube channel. However, if you are already a subscriber to the channel, for a small premium charge, you can continue to see our Friday weekend review.